Hi everyone, today I'm going to talk about IPOs. IPOs stand for Initial Public Offering, and it's when a company changes from a private company to going public. When they go public and they meet certain listing standards to get on the New York Stock Exchange or maybe the NASDAQ, they need to be making, so many millions of dollars per year in revenue. They need to offer at least 1 million shares open to the public, and their list price needs to be at least $4 per share. So in Robinhood, to find out about any upcoming IPOs, you can just go to the main screen, that bottom left icon with the stock chart. You can click on that and scroll all the way down, and you see a thing that says IPO Access. So you click on that, and this will show you any upcoming IPOs. They call it in flight, so these things are getting ready to go. They give you a chance to participate in getting in on that ground floor of owning a share of one of these companies. If you want to get in on an IPO through Robinhood, you could say, yes, I'm interested. And it's not guaranteed that you would actually get a share of that, but there's a chance that you will be able to get a share of that. So these are the couple of companies that are in flight. They aren't public yet. They're getting ready to go public. So let's look at Circle. Their target price to go public is somewhere between $24 and $26. Circle Internet Group. So if you're interested, you can just click that I'm interested button, and it tells you a little about this group. Looks like there's some kind of a crypto company. Personally, I'm not going to say I'm interested in this simply because the competition, there's already a lot of crypto companies out there that are already probably bigger than Circle Internet Group, because I never heard of them. And, they can do everything that this group says that they can do. So there's nothing really interesting or unique about this company that's going to position them to compete against groups that are already out there. So I'm going to avoid this one. I'm fine with that. AIRO looks like they're going in between $14 and $16. AIRO Group Holdings Inc., U.S.-based autonomy and air mobility company, founded in 2005, specializing in drones, avionics for the aerospace and defense markets. So it tells you who the CEO is, how many employees, headquarters. I like to see for the number of employees. Some of these companies only have literally 2 employees and they're public. I usually try to avoid those. It's just such a small amount of people. But at least 100 employees, that's a better sign for me. But you can also look at their public filing. It says show prospectus. This is where you can learn more about the company. Everyone who goes public needs to file this form to the SEC, and it tells you everything you need to know about what they are, what they do. They usually have a little PowerPoint in here, and here's just a taste of that PowerPoint. They do stuff with drones. They tell you, hey, we brought in $75 million. Avionics, training, electric air mobility. So that all looks nice, but really what I would look for is actual videos of these things flying and being effective, because you can have these little promo videos of it's all just computer generated graphics, and oh yeah, they're really hyping it up and all that. But I want to see actual things flying and delivering heavy payloads and such. Something real, instead of them just selling you a story. Not saying that that's going on with this company, but just be aware that these companies in these early stages are more relying on concepts instead of actual stuff. But they have been around since 2005, and they are making millions of dollars in revenue, so that's a good sign. And you need to be aware of the industry. Their biggest customer is probably the government, and typically that would have been a good sign, because the government has a lot of money behind them and to spend, and they're always looking to bolster their military. But on the other hand, more recent years, with Doge looking to cut costs, they could look at this contract and say, you know what, we don't need it. And that's a big risk for a company who only has one client, or one major client essentially. So you need to be aware of that when looking for IPOs. But you can look through that and decide for yourself if it's worth the risk and all that. And then we see milestones. They already did initial filing. They have a price range. Final price to be decided soon. They're not quite public yet. But if you're interested, you can click the I'm interested button. Now, the thing to keep in mind is through Robinhood, they want to encourage people who are actually interested in these companies to have like a long-term belief that these companies hold value. They want to participate in owning a part of the company, and they want to watch it grow over time. So if you do say you're interested, actually be interested, and you need to hold on to that stock for at least 30 days. Because if you try and flip it, try and buy it as soon as it comes out through this program, and then flip it, you sell it that day or maybe the next day when the stock might jump up in price, then Robin's gonna look at you and say, oh, okay, this person's a flipper. They're not actually interested in this company. They just want to make a quick buck off this IPO, and they'll restrict your account for IPOs for something like a couple months. But that's through Robinhood. If you do want to like flip stocks like that, I would suggest you just look at when that company is going to go public and buy it at the open market that day, and then flip it once the price goes up, maybe the next day or something like that, so you're not marked as a pattern day trader. And then that way you can make your quick buck on that IPO hype, get in, get out, without actually violating Robinhood's early IPO access. If you want to get into that IPO for real, then you say, yes, I'm interested. And then, for example, that Circle company, let's say they launch at $25, you buy a share at $25, and then you just hold on to it for at least a month. And if you decide later, oh, I actually don't really like this company, I'll sell it. No hard feelings, and you're not going to be flagged as someone who's violating their IPO rules for Robinhood. So that's something to keep in mind, that you need to hold on to those stocks for 30 days if you do go through this early IPO access. Otherwise, just buy it at the open market and then flip it if you want to be a flipper. And then we can see launched. We can see CRWV, Bird, Reddit, Guts. Some of these I never heard of. ARM, Instacart, New, Iris Energy, Braze, Sweetgreen, Backblaze, Expensify, NerdWallet. Yeah, some of these I have never heard of. But you can check these out for yourself and look at the day they launched and how the stock's performing now and compare the two. I'd say at least 90% of the time, the stock's probably gone down since they launched. I mean, usually what I see with these IPOs is there's all this excitement and people buy a bunch of stock, so that makes it more valuable and the stock price goes up. And pretty soon after, a bunch of people sell, probably make that quick buck, and the stock plummets. So just be aware that IPOs are pretty volatile once they, in the early stages of launching. So I see that time and time again of the stock price jumping up, plummeting, and then maybe a few months after they've launched, it kind of stabilizes into the real price of what the market thinks that it's worth. So that's something to keep in mind. IPOs are pretty volatile like that. So that's how you look at IPO access. Thanks for watching.